What's going on, everyone? We have another filing to talk about. This one's out of SIBO, SR-CBOE-2021-02. Now, this one's a designation for a longer period for commission action to approve or disapprove proposed rule change to increase the limit for ETF and ETN option position sizes. Let's go ahead and take a look. So the purpose of this, it says right here that position limits are designed to address potential manipulative schemes and adverse market impacts surrounding the use of options, such as disrupting the market and the security underlying the options. While position limits should address and discourage the potential for manipulative schemes and adverse market impact, if such limits are set too low, participation in the options market may be discouraged. The exchange believes that the position limits must therefore be balanced between mitigating concerns of any potential manipulation and the costs of inhibiting potential hedging activity that could be used for legitimate economic purposes. Now, a market maker generally is the one that is approached when ETF creation process is occurring. We went over this in a previous video. I'll link that at the end of this one so you can take a look. So they use the market maker or a large institution like BlackRock or Vanguard to acquire the securities that the ETF is going to hold. In other words, it's also known as a basket of securities in financial terms. But for example, when an ETF is designed to track the performance of an index, the authorized participant can purchase all the constituent securities in the exact same weight as the index, then deliver those shares to the ETF provider. In exchange, the ETF provider gives the authorized participant, or the market maker, a block of equally valued ETF shares on a one-for-one fair value basis. The price is based on the NAV, not the market value at which the ETF is trading, therefore eliminating all price discovery. So the net asset value, by the way, that's what NAV means. All it is it just represents the net value of an entity, and it's calculated as the total value of the entity's assets minus the total value of the liabilities. That's how you derive the net asset value. So in essence, this is a pretty simple one. It says right here, the exchange's surveillance and reporting safeguards continue to be designed to deter and detect possible manipulative behavior that might arise from increasing or eliminating positions and exercise limits in certain classes. The exchange believes that the current financial requirements imposed by the exchange and by the commission adequately addresses concerns regarding potentially large, unhedged positions in the options on the underlying ETPs. Now, ETP is just an acronym for exchange traded product, so it could be an exchange traded note or an exchange traded fund. And of course, this will further promote just and equitable principles of trading, the maintenance of a fair and orderly market, and the protection of investors. So some key takeaways. Date of effectiveness from this, since we see it on the register right now and is scheduled to be published tomorrow, we should expect a decision within 45 days of tomorrow's date. Now, in summary, SIBO wants to increase option size limits on certain ETFs and ETNs to prevent manipulative tactics involving large, unhedged positions, FTDs. This ruling will help prevent manipulative tactics involving the underlying security of the ETP. The exchange believes that the proposed increase in position limits for options on the underlying ETPs may enable liquidity providers to provide additional liquidity to the exchange and other market participants to transfer their liquidity demands from OTC markets back to the exchange. So they're really highlighting core problem that's been going on around ETFs. It's crazy that they actually put all this in the filing itself. But yeah, they've basically outlined the problem with the ETF creation process, and they're going to increase position sizes on certain types of ETPs. So there you have it. Hope you learned something on this one, and as always, have a good one.